You earn so much money and then you finally want to put your money into some investment and then it is a money trap. How?
And with the balance you just throw to any S&P or any funds, right, you would have make more.
You buy more, you save more. If you don't even buy in the first place, you don't even spend that money.
Are you going to have the dollar in your pocket or are you going to buy that donut that you don't need for 50% discount?
The people who buy would have bought. The people who wouldn't buy wouldn't have bought in the first place. They say wait for the crash.
Oh, let me wait for Dogecoin to drop. Wait for crypto to drop.
Tesla is already so high, don't go in anymore.
What? It's just so dumb.
Hey guys, welcome back to Cafe Money. In this episode, we are going to talk about money trap. So you save out so much money, you want to put that into some investment or you want to spend it and you end up losing them all. So what is money trap?
For money traps, I have 4 points. First, number one is investment-linked insurance, investment-linked policy.
I have that. I used to have that.
Okay,
I bought one before.
Investment-linked policy, basically you pay the insurance company every month, certain amount of money, they invest for you. The shitty part is that the coverage is very minimal. You just understand that most big funds, like investment funds, they will underperform the stock market. 99% chance they will underperform the stock market. So there's no point if you get any insurance product, it's just to cover yourself, critical illness, hospitalization, accident, that's it. And by the way, just to let you know why the agents sell you that, because they earn the most commission out of investment-linked products.
But you know, like so many people, if they start work, they meet an insurance agent, most of them start off with buying an ILP, right? Investment-linked policy. But why is it crap?
I started off buying an investment-linked policy. When I was at the age of 17, someone sold me that dream of a policy that makes back money by itself and your insurance coverage is for free.
Was it a very pretty lady selling you?
No, it was a very ugly guy.
No.
So I wasn't clear about my objective. You know, looking back, if you take the same amount of money that you invest in every month on that policy, split it up into insurance, which you ultimately pay so much lower, higher coverage, and with the balance you just throw to any S&P or any funds, right, you would have make more. But then again, right, if you really look deeper into investment, you realize that it really makes no sense because there's so much allocated into a bad investment. Your coverage is actually very
and you have
little
no control as to what they invest in, right?
That's one part, but your coverage is insufficient. That's even worse. That means you're there for supposed to cover yourself, but you have a worst off coverage and a worst off investment parts.
I heard there's some new updates to this policy, but I do not have much information about it. Maybe next time we can share more.
Yeah, there's just 2.0 or 3 or something like that. I think they realized too many people are yelling that it sucks. So they did a revision on it.
If I'm not wrong, there's one little update. Some of them are putting options into this. That means they're selling covered calls on this, but
they became more risky.
I mean, long story, forget it. Just walk away. There's another money trap which I see a lot of people get into is memberships. People buy membership, for anything.
Type of membership?
Anything. So the basic structure of a membership is this: you buy more, you save more. But my thinking is, if you don't even buy in the first place, you don't even spend that money. So this is just it. But in terms of like gym memberships, I think that's fine if you use the gym all the time. If you don't, then that is probably the only membership I would think is fine.
I don't know about that. I have similar points as you because I think it's about like paying for like an ideal life that you think you will have after paying. Right? You pay for the gym membership and then you think that you will become very fit because you think that after paying you will go. But it didn't happen to me, and I think it didn't happen to a lot of people. You pay for the gym membership, you maybe go for once or twice, and after that you just didn't go. And then because it's a subscription, you have to continue paying.
I think it's a very unfair statement. I think it's an unfair statement, right? I think
Why?
I mean, it's a commitment, right?
Yeah.
You put a membership out. It's a commitment fee, right, for you to go. In some crazy cases like Qiuyu, which is maybe not rare, people really don't go, right?
I think most people is like, you all pay one time and don't go.
But Ken went as well. Ken pay for
because I bought the
classes.
most expensive gym membership. If I don't go, I feel like shit.
So it works. It works for Ken case, right?
Maybe we can let the audience comment below how many of you guys are like Ken. If you put in the money, you committed yourself to it, you will go for it. Or how many of you are like me? You pay the money thinking that you will go, but end up you don't go.
Yeah, but I think the conversation is about dollars and donut. Let me share a little bit more. So there's a classic like saying that dollars or donut, which means that are you going to have the dollar in your pocket or are you going to buy that donut that you don't need for 50% discount? So they always have this dollars or donuts, right? Which is very true. So when it comes to membership, maybe a more advanced question will be, you wouldn't know whether it's suitable for you or not. Yes, you can get it cheaper for 2 years or 3 years, but just buy that 1 year seemingly more expensive membership, because although it might cost more over a long run. But you think about it, you're actually paying much lesser. Because they are trying to disguise you by doing all this mathematics of like, oh, you've paid for 3 years, it's only like $69 a month and all that. But the quantum wise, you're paying like $4,000, $3,000. Whereas if you sign for 1 year, it's maybe like $1,800 or $2,000, right? But they say, no, don't do that. It's very expensive if you split it on 12 months. But end up if you don't go, and it's proven that if you sign for 3 years membership, why they can sell you cheaply is because you don't even show up on the third year, right? Most people don't even show up, right?
That's why money trap.
Yeah, so I think about that, right? It's not just about don't go for membership, but be very clear about this kind of long-term stretch, this kind of like, holistic offering that you might not even utilize in the long run.
I mean, don't just talk about all this kind of thing. You talk about like, let's say you go to the supermarket. People package things for you like in a bundle, right?
Buy
you
5 get 4 free.
Buy 5. No, you buy 5 is cheaper. Actually, you only need 1, but they make you buy more. Then what happened to that thing? It became a white elephant.
It sounds very familiar.
Is it you?
No, I see a lot of people doing it. Like,
it's very common, right?
I think it was worse because everybody just assumed bundling is affordable, right? So I went to this shopping mall in this place in Little India. Start with an M, right? So I went to this area where they sell very affordable stuff, right?
Okay.
So this is in Singapore context. So I went there, right? And I saw like bundles of product, right? So I thought it's cheap. I immediately grabbed it. I just felt something is wrong. And I went to check the price. When you buy it a la carte by itself, it's actually cheaper.
what?
That is weird.
So-
Did they price it wrongly?
I don't know, but that's a problem with bundling, right? You just naturally assume it's more affordable. Perhaps it's a pricing issue, but it's so scary. If for a not trained person, they just thought, hey, maybe I'll just grab a bundle, it's cheaper, right? And I actually fall into that trap even without a cheaper price. Luckily I went back there, right? And then I like, you know what? That's dumb. And let's just buy one, right? And the truth is, you are right. Most of the time, you might have excessive amount of things that you don't need at home, right? And if you don't use them, they get decay, they spoil, just buy it when you need it. I think that's the main essence of this conversation, is that buy it when
need
just
it.
where you need
Just
it.
buy when you need it. Ultimately, on the short term, it may seem expensive, but if you have that mindset all the time, you realize you're spending less on other things.
You might end up saving more.
You might actually end up saving more. So just buy what you need. Like the episode I did, like need versus wants. Like I do see some people, they like to collect points.
Collect points.
Collect stamps they chop. Yeah. I mean, I don't blame you. I mean, that's the mindset that these companies put this into you because
Price
they want you to
inducement,
go back again and over and over. I don't mind paying more, but I just buy what I need.
Yeah, unless you have something that you are very predictable.
Like toilet paper.
Yeah, like you
Oh, yeah.
definitely, please go and buy bundles. I mean, the worst is to have no toilet paper at home.
Yeah.
Please go and buy bundle for that. There's no harm, right?
Things that you definitely will use, right?
What are some money traps that you see, Qiuyu, before we just pass around to see?
I think, credit card.
Credit card. Oh,
Credit
yeah,
card
that's a
is,
good point. I'd love to share that as well. Yeah,
Credit card is very useful, but I think for a lot of people, especially if you just start work, you first time encountering this card where you can just and pay money, right? I think it's a very scary trap because if you are not careful, you can overspend very, very easily. And to my surprise, right, actually a lot of adults out there, they don't even know that they are not supposed to just pay the minimum sum. The minimum sum is just to like give you the illusion, hey, you know what, you owe
no
say
late fee. There's
like
no late fee.
there's no late fee. You owe $5,000, never mind, you just pay this minimum sum of say a few $100, and people just thought they can just pay this minimum sum, but actually there's a lot of interest incurred for the rest of the outstanding.
Hardcore money trap.
I think the interest is damn high, right?
24%, I think.
Wow.
And of course, if you are in a credit card trap right now, you can easily go for debt consolidation.
Yes.
You would have easily bring it down to 5. That's another thing that people don't know. They might have multiple credit card issue, right? They can actually do a consolidation and bring the interest down. But let's not even get there in the first place, right?
Okay.
And just pay in full. And it's so common that people get lost in the illusion of time. So I've seen many folks right now are living a month in advance. What do I mean? Means they spend so much, they need to use their next month salary to cover their last month expenses.
And that's pretty common, man.
Yeah, and they're now just waiting for that one wrong or that one tweak to screw up the whole financial planning, and now they're on debt.
Imagine you lose your job,
Yeah, or that
and
one
then
month.
you are in debt already.
The 1 month delay, or that something happened, or that 1 month bill, right? You are immediately in debt. So because you are already primed and framed for that, credit card companies can provide you with all this convenience, because they know that the percentage of people that go to default, late payment, paying minimum is high enough that it is a profitable business.
Yeah.
What do is you invest in the bank, but don't invest in the credit card debt. Okay, but it's still not a good investment. For me, right, I think that one of the biggest money trap is car. It's not about buying car. I think in many countries, it's important to own a car. Of course, for prudency's sake, buy a second-hand car.
Not in Singapore, but most other countries, where the public transport is not so,
But the
Not
real,
so accessible,
but the
yeah.
real money traps come from the buying of the car. So
What
what
do
I
you
mean?
mean?
Yeah. So what do I mean, right? So there lies a lot of traps over there where they have the no money scheme, blow up loan scheme, and there are many things as well. Imagine you want to buy a cheap car and someone go there and say, hey, actually, you can pay the same down payment for a more luxurious car. I can just do something for you with the math of the loan, right? You get yourself trapped with a very, very big debt.
What happens?
So meaning to say,
Good question,
you
I'm gonna
go
answer
into a showroom and you say, I'm going to buy this cheap car.
Yeah.
So the salesperson come to you and say, why not
Upsell.
for the same money a month,
Yep.
you get this car that's brand new.
Yep.
So that's what you're trying to say, right?
Qiuyu and I have experiences whereby, just that she asked me, I suddenly thought of this. They tell you that, I can buy back your car at a much more expensive price later on. So it's okay. And then they just close down their company. They don't do such fulfillment. You are trapped. Worst off, they tell you that, you don't need so much money upfront. But you've forgotten, right, that over time, your monthly installment could add up to another 100, 200K more by driving that better car. And that money can jolly well be invested, right, and grow your pot of gold. And that's the thing that most people miss. They look at upfront cash outlay and they've forgotten over time that liability expenses, right? It's not even a property, You pay for property interest, it's still okay if you rent out to China, right? But this is just pure expenses, right? And it adds up, and that's the scary part.
So you need to be very careful what you are looking for. If you already know that this is your certain budget that you have every month and what's the certain budget that you have for upfront down payment, right? Stick to it. Don't let people sway you.
Or you can use your cow sense. You look at that car is a lot newer. Obviously, it's going to cost you more. But why does it sound too good to be true? Obviously, something goes behind it, right?
It is.
Yeah.
The car industry remains as a product industry. It's not investment, but yet it's a very expensive ticket item.
Yeah.
So because it is not regulated as much, there's a lot of bullcrap schemes. Because it's not regulated, it's not like stocks market, you get it, right? So people come out with like funny loan scheme packages, buying, selling, buyback scheme, rent till you own the car, and all this stuff. And if you don't dissect the number down, right, it can just balloon up to a gazillion big dollar money trap.
More than 90% of people don't really do the maths behind it.
They don't do it.
I totally get it. When I first started work, I didn't look at the numbers behind a down payment of a car and installment. Wow, that was pain.
Never end a conversation with, so I can trust you for this? Yeah, it's definitely a good buy. This is so dangerous because they have an agenda to sell, and it's not wrong. I mean, they're salesmen, right? I mean, they're just doing their job to for the company, for their own pocket, right? For their own commission, right? But you just have to be smart enough to understand. And of course, in countries like us, where Uber, or in our Asia version, which is Grab, is very accessible. Do really think about that. Yes, you might not have the luxury to own a car, and if you stay in a city center where everything you have a metro away, a train away, and bus, right? Think about how much that can save you than buying a car. And in Singapore, we are very blessed. Parking fee is not the most expensive. And I was in Australia previously, right? Oh my God.
Oh, Australia parking fee. Oh,
my God.
$20 per hour, right?
Oh, yeah.
Serious?
Yeah. Like,
it could be like
Australia.
It could be like
Sydney.
$60 a day, $80. Like,
It was
the
like
city center.
$23 an hour. Like, what?
Those are expenses they don't see because you're trapped now, you have a car. And then there are more expenses that's about to come, right, and built up, right? So they're so dangerous, right, guys? So, and of course, if you take Grab, or Uber, depending on country, you can stop taking it when you just find that your funds are a little bit low, right? There's no commitment. You're just paying it up front, right? So like what Ken say, any form of membership, any form of commitment, right? Can lead you down to a very dark path, and think carefully. I mean, for the few moments of glory of sharing to your friends or your date that you have a big car and you're going to pay a price debt of your retirement and your $1 million portfolio, I don't think it's worth it. And if you guys agree what we are saying right now, right, do comments, man, that cars equals to liability. Type it down in the comments, guys. Yeah.
A lot of people who are in their 20s, they'll fall into this trap. Again, it has to do with insurance. But in this case, it may not be insurance linked. They are more savvy. So what the agents will sell them is this thing called endowment plan. Very simple. You pay every month. And to a certain age, maybe age 50 or age 55, when you start at 20, and thereafter, when endowment plan ends, depending on the plan, you get one lump sum, but not the full, and every month they will pay you out money. End of it is like 5% interest.
I tell you how bad is it. If you do the effective returns, right, it's actually 2.4.
What? You calculated that out?
Calculated. It's not even 5 because the other half is non-guaranteed. If you really read the policy, there's a non-guaranteed component to make it legalized in most countries.
Wow.
And those are usually not filled.
I mean, if you look at it that way, you're still again better off putting money into an index or tech index, Nasdaq 100, S&P 500, whatever it is. It still makes a lot more sense.
Don't get us wrong. I think we believe insurance is important. I think all of us here, right? Just that when you start to confuse investment and insurance, I don't think it will go that.
Depending where you are from, just cover enough for you to, when you go to hospital, at least your hospital bills are being paid for. And let's say anything critical happen to you, you get a little bit of money to pay up a lot of stuff. As long as you get that covered, you don't need to spend a lot of money on insurance.
You're good. You should get your biggest part of your goal not from your death. It's from you being alive, right? I mean, I've seen people buying policies so crazily, right, to a point whereby the only way for them to become a millionaire is when they die. I mean, it's crazy, right? And you ask them, so what is your plan to be a millionaire when you are alive? No, not really, right? And that's the scary part. Like, why wouldn't you want to be a millionaire when you're alive, right? So start investing. I think that's the key thing why we even built this channel.
Yeah, and I see it's not not a few, it's quite a lot of people spending more than $1,000 a month on insurance. I know quite a few people, including my family. I don't want to say who, but like, oh my god, it's like a lot of people doing that. They spend a lot of money on insurance, maybe 30% of their salary.
What?
It's just so dumb. Maybe they wasn't advised properly. It was financial education is not taught in school, so I don't blame them. But once you dig down the numbers, you understand that it doesn't make sense.
And also one thing, since you're on this topic, right, I think that maybe sometimes is they bought this type of policies very early, right, and then they don't do a review after that. Because sometimes if you do a review, you will realize that for certain terms of protection insurance, right, it can get cheaper, contrary to what people believe that as you age, right, it gets more expensive.
Yeah, you should always review.
Just
There's
review
no harm.
your policy.
If someone can pitch to you something that is covering more, paying less, just jump. I mean, if you happen to have a illness, unfortunately, right, then you don't want to be shifting around. I mean, we are not financial planner, insurance agent, but I mean, that's one thing that you should know. As at my age, I know this now that, when you have some changes in the health, then you don't want to shift your policy around. It's not so cool. Things get really expensive.
Any other money trap?
I think the biggest one, which I think I'll get a lot of heat from, if they don't understand the context, right, is paying your debt too early.
What do you mean?
Yeah, so a lot of people say, hey, I want to be debt free when I retire, right? I want to pay off my debt, right? But to me, if you have that $200,000-$300,000, if I were to choose to be paying my debt for my property, I'll rather use it to invest to make more money and thereby pay my debt much later. Because if the $200,000-$300,000 is all I ever had, right, or $100,000, right, I will need to grow it effectively. Like in some of our past videos as well, at least put some money on Cake DeFi, put some money on the crypto, put some money on Tesla. Just you have to grow it, because if you pay off your debt, essentially you are debt free, but you are not financially free. It's a big difference between debt free and financially free.
Yes.
Right? And financial freedom comes from you having surplus cash, surplus fund, big portfolio to do what you want. And it's not just being debt free. Debt free just sets you to zero.
Yeah, I think a lot of people, when it comes to money and finances, right, they aim to not earn money or grow their wealth. They aim to clear their debt. And if you have that kind of mindset, right, I think a lot of the time, whatever money that you have, you aim to quickly pay it off, and then you end up with nothing for investment, and then you don't grow your wealth.
There's this thing called good debt and bad debt. So what you're talking about is good debt. Good debt is good to have, like property, mortgage. I think that one is fine.
Yeah, it's fine.
Bad debt is like car.
Yeah, better is like your credit card at 24%. Like anything at 24%, you pay off immediately, because that kills you over time really quickly, right? But you have like a 30-year mortgage at like 2%. I mean, come on, like that's really you know what's worse? Let me tell you what's worse that a lot of people don't see it. In my country, there are certain asset you cannot refinance. You cannot take out the value of it. The asset is worth $1 million, right? You can actually go to the bank and say, hey, you know what? Can I take a mortgage on this asset, right? But in my country, right, there are certain government projects, we call it HDB housing, right? That means government housing, right? That if you pay your debt in full, you cannot refinance. So what does it mean?
You can't cash out unless you sell the property.
Sell your house. So which means, right, you are trapped. You are even more trapped. Right now, your only pot of gold is reinvested back into something that is stuck for life and doesn't grow in value. So to me, you got to be very careful when it comes to clearing debts. Maybe I say that, right? Yes. So that's why I say it's a controversial topic, but I think it's very important to understand how to approach debt. Clearing it too fast, having a pot to invest is your fastest way to be broke.
I have helped a few people in my life in person to clear massive amount of debt. It may not sound financially sensible right now, but it's all about keeping that mind to clear that debt. So how it happens, usually they have a lot of credit card debts. That's how it happens. And usually a financial advisor will tell them, look, you clear the one with the highest interest first. I mean, that makes the most sense.
One that I mentioned earlier.
But mentally, it's so hard to do. So how these people, all companies have a 100% track record, all cleared their debt, right? What they do is they clear the debt, the credit card with the lowest quantum first. So let's say one credit card you own 30,000, the other one own 5,000.
Yeah.
Clear the 5,000 first, because that mentally sets you up to win. Because
Success.
I cleared one.
Track record, habits.
Yeah. So this is probably the way, if the few of you are watching it, if you're in debt, really bad debt, just clear the easiest one to clear first and you move up the ladder.
I think that's a perfect point. Also, do consider debt consolidation. I think in every country there is a debt consolidation service in a way, provider, right? Do consider that, because one is to clear, second is to drop the bloody percent down. You get it? If you can drop it down, it's good, right? But just avoid some of the traps I say earlier. Don't even get into such situation in the first place, right? So, Qiuyu, what about you? Is there anything that you see people get trapped in or when making decisions?
Another money trap that I think many people fall into is delayed gratification. What do I mean? So this gratification is like they delay the investment. They keep thinking, I need to wait until don't know when, then they will invest. They always give excuses for investment. I don't know if you have met anybody
it's like a mindset
that.
trap, right? It's like a money mindset. It's like, I'm going to wait for the stocks to
drop.
Right.
Oh God.
Wait for something to happen, then they will invest.
Yeah.
So I think this is a very big money trap.
It's like they always retrospectively look at past successes and keep thinking that they miss opportunity. Let me wait for Dogecoin to drop first before I invest. You get me? Let me wait. The worst. Let me wait for crypto to drop first before I invest. Let me wait for.
Or Tesla is already so high, don't go in anymore.
Yeah. I mean, when you do that, right, you're setting up yourself for failure immediately, because if it drops, you're not going to buy into it. That is the mindset for these people. You know, the March when I was shouting to everybody, I have proof, 1 million views. The people who buy were bought. The people who wouldn't buy wouldn't have bought in the first place. They say wait for the crash. Those that wait for the crash came, I'll wait even longer.
That's not the bottom. That's not the bottom.
Yeah, I see this so many times. And when it kept creeping up, they say, the economy haven't recovered, blah, blah, blah. Instead of doing that, just if you are comfortable with the asset, just put in a little bit and dollar cost average into the asset.
Interestingly, right, when it comes to expenses, people seem to not grasp this mindset. They don't say, wait for me to make that amount before I spend. They just spend immediately. But when it comes to investment, there must be waiting period.
Yes.
I just don't understand, right? They're so worried about losing some investment dollar and learning, but they're so comfortable at throwing money for expenses.
Buy things.
Buy bags, buy cars.
We're going to talk about buying things later.
We're going to
future episodes?
Yes, we're going to talk about it, right?
All right.
There's some of the issues when it comes to expenses, right? But not this episode, right? And Ken, is there any final advice you want to give people about money traps?
When something sounds too good to be true, it often is. If you don't really understand about what you're going to buy, you just got to break down the maths and you'll probably get it.
Just be very careful with where you put your money in. I think especially membership and subscription. Don't be so easily by all these marketing gimmicks.
When you sign on the dot, do calculate the future expenses that it comes together. For example, your car, your insurance and all, because it's not just that could be the start of your death when it comes to financial planning.
It takes a little bit of work, but you could save you tens of thousands of dollars.
Or even hundreds, right?
Yeah.
Over a long run. Yeah. And with that, thank you guys for watching this episode to the end. Please subscribe to us and comment. What are some of the money traps you see out there? Is there any Ponzi scheme happening around the country that people should take note as well? Help out in the community, type it in, right? And I'll see you at the next episode.